Chapter 19. Payroll, Accounting and Pension Fund. Contents: 1. Purpose. 2. Procedure for approval of payroll. 3. Custody of personal emolument records. 4. Action by salaries section on payroll. 5. Action by internal audit unit. 6. Action by cash office. 7. Pension Reform Act 2014. 8. Objectives of Pension Reform Act 2014. 9. Exemptions from Pension Reform Act 2014. 10. National Pension Fund Commission. 11. Powers of the National Pension Fund Commission. 12. The principal objectives of National Pension Fund Commission. 13. Composition of National Pension Fund Commission. 14. Rates of contributions. 15. Withdrawal from retirement savings account. 16. Age of contributor. 17. Payment of retirement benefits. 18. Death of an employee. 19. Where an employee is missing. 20. Exemption from tax. 21. Contribution under the scheme. 22. Exemption from the scheme. 23. Transfer from one employment to another. 24. Chapter review. 25. Worked example. Payroll, Accounting and Pension Fund. Purpose. After studying this chapter, readers should be able to: A. Explain the procedure for approval of payroll by the Accountant General. B. Discuss the action of salaries, cash office, and internal audit sections on payroll. C. Outline the objectives of Pension Reform Act 2014. D. Identify the categories of people exempted from Pension Reform Act 2014. E. Discuss the provisions of Pensions Act 1979 as updated and Pension Reform Act of 2014. F. Discuss the powers and functions of the key pension administration institutions. Payroll accounting in the public sector. Procedure for approval by Accountant General. The procedure and method to be employed by federal ministries, departments, and units for the recording and the calculation of personal emoluments must be approved by the Accountant General. The standard payroll system to be applied in all offices, unless otherwise provided under FR 1818, shall be such as to ensure that maintenance of the following records will be made in a single operation. A. Personal emolument record. B. Payroll in duplicates together with a bank paying in advance slip. C. Pay statement to be issued to the individual officer. The above provision shall be applied irrespective of whether the system is computerized or not. The officer controlling expenditure shall ensure that the standard personal emolument records shall show the following: A. Standard rate of pay of the office. B. Incremental rate. C. Standard allowance. D. Salary and other advances issued. E. Tax payee. F. Gross emoluments. G. Standard deductions from emoluments and net emoluments payable. Custody of Personal Emolument Records Cards (PERC). Where the accounting system is manual, the head, finance and accounts, shall ensure that the personal emoluments record cards are kept under strict security arrangements. The RC shall always be kept under lock and key in a fire-resistant cabinet, safe or strong room when not in use. It is mandatory for every officer to complete the personal emolument record form annually, which must be certified by the head of department or other designated officer. The completed personal emolument form shall be the basis for opening the group registers, which must be audited before the inclusion of any officer in the payroll. Action by Salaries section on payroll. The payroll section shall ensure that the following actions are taken. A. Effect necessary entries in the personal emolument records of each employee in the payroll, e.g., basic salary for the month, deductions, and net salary payable. B. Aggregate all entries made in A above and raise Treasury Form 209 to take care of deductions. C. The Treasury Form 209 raised shall be classified to the appropriate below the line classification code. D. A summary payment voucher Treasury form shall be raised on pay point basis to capture the total basic salaries and allowances due to arrive at the gross amount due to all officers in a pay point, the total deductions, and the net amount payable. E. Process cash order form in accordance with the provision of financial regulations. F. Effect necessary entries in the personnel emolument voucher, register, and vote book. G. Carry out internal check of payroll entries and vouchers to ensure accuracy of postings, taking into consideration vacation in officers, salaries monthly. H. Compare and reconcile the figures computed by the secretaries and wages section with the figure in the variation sheet for a given month. I. All summary voucher and Treasury Form 209 shall be signed by the officer controlling expenditure after agreeing the figures therein with those and the variation control sheet. J. Thereafter, the payrolls supported with summary vouchers TF 209 and on-payment vouchers shall be forwarded to the Internal Audit Unit. Action by Internal Audit Unit. On receipt of payrolls from the Salary and Wage section, the Internal Audit Unit shall effect the following. A. Ascertain the accuracy of entries in the personnel emolument records of officers and the payroll by examining them in details to ensure that variations, if any, in the emolument of staff are correctly stated. And the payroll by examining them in details to ensure that variations, if any, in the emolument of staff are correctly stated. B. Examine all summary vouchers and other relevant supporting documents to ensure accuracy of all deductions and net salaries payable to individual officers. C. Ensure that gross salaries payable as reflected in the summary vouchers agree with the figures in the variation control sheet. D. Extract copies of summary vouchers and other supporting documents for record purpose. Action by Cash Office. A. Check payroll summary voucher and other supporting documents against entries in the forwarding schedules from the Internal Audit Unit to ensure that all relevant documents are complete. B. Sort and allocate treasury payment voucher number to summary vouchers and on-payment vouchers and treasury receipt vouchers in respect of TF 209. C. Stamp all summary vouchers and on-payment vouchers with a paid stamp for the month of account. D. Draw checks for the net amount payable in the summary payment voucher in favor of the bank through which payment is to be made. E. Draw checks due to various agencies as reflected in the on-payment vouchers. F. Post all payment vouchers and or treasury receipt vouchers separately in a salary cash book. Balance the cash book and reconcile with bank statement monthly. Pension Reform Act 2014. By virtue of the Act, both the public and private sector's pension schemes are now contributory. The employers and employees are expected to contribute a minimum of 18% in aggregate towards the retirement of the employee. The rate is subject to review as may be agreed between the employer and employee. Objectives of the new Pension Reform Act 2014. A. To provide a sustainable and well-managed pension to employees both in the public and private sectors. B. To ensure that all and sundry in the working class save in order to make provision for life after retirement. C. To ensure that all and sundry is entitled to and receive terminal benefits as and when due. D. To ensure that all regulations and guidelines available for administration and payment of retirement benefits are applicable to both public and private sector officers. E. To sustain a worthwhile standard of living of all employees after retirement. F. To ensure that pension contributions are fully protected till maturity before the retirement of the contributor. G. To improve pension management structures in Nigeria. H. To create job opportunities. Exemption from new Pension Reform Act 2014. The categories of persons exempted from the contributory pension schemes are: A. The categories of persons mentioned in Section 291 of the Constitution of the Federal Republic of Nigeria, 1999, as amended, including the members of armed forces, the intelligence and secret services of the Federation. B. An employee who is entitled to retirement benefits under any pension scheme existing before 25th day of June 2004 and has 3 or less years to retire. C. Fully funded pension scheme, National Pension Commission. Objectives. The objectives of establishing the National Pension Commission are: A. To ensure that every person who works in the public service of the Federation, FCT, and private sector receives his retirement benefits as and when due. B. To assist improvident individuals by ensuring that they save in order to cater for their livelihood during old age. C. To establish a uniform set of rules, regulations, and standards for the administration and payment of retirement benefits for the public service of the Federation, Federal Capital Territory, and the private sector. Powers of the Commission. According to the Act, the Commission shall have power to: A. Formulate, direct and oversee the overall policy on pension matters in Nigeria. B. Fix the terms and conditions of service, including remuneration of the employees of the Commission. C. Request or call for information from any employer or pension administrator or custodian or any other person or institution on matters relating to retirement benefits. D. Charge and collect such fees, levies, or penalties as may be specified by the Commission. E. Establish and acquire offices and other premises for the use of the Commission in such locations as it may deem necessary for the proper performance of its functions. F. Establish standards, rules and regulations for the management of the pension funds. G. Investigate any pension fund administrator, custodian or other party involved in the management of pension funds. H. Impose administrative sanctions or fines on erring employers or pension fund administrators or custodians. I. Order the transfer of management or custody of all pension funds or assets being managed by a pension fund administrator or held by a custodian whose license has been revoked or subject to insolvency proceedings to another pension fund administrator or custodian. J. Do such other things which in its opinion are necessary to ensure the efficient performance of the functions of the Commission. The principal objective of the Commission. The principal objective of the Commission, according to the Pension Reforms Act 2004, is to regulate, supervise, and ensure the effective administration of pension matters in Nigeria. Functions of the Commission. The functions of the Pension Commission, as stated in S20 of the Act, are A. To regulate and supervise the scheme established under this Act. B. To issue guidelines for the investment of pension funds. C. To approve, license, regulate and supervise pension fund administrators, custodians and other institutions relating to pension matters as the Commission may from time to time determine. D. To establish standards, rules and guidelines for the management of the pension funds under this Act. E. To ensure the maintenance of a national data bank on all pension matters. F. To carry out public awareness and education on the establishment and management of the scheme. G. To promote capacity building and institutional strengthening of pension fund administrators and custodians. H. To receive and investigate complaints of impropriety levied against any pension fund administrator, custodian, or employer or any of their staff or agents. I. To perform such other duties which in the opinion of the Commission are necessary or expedient for the discharge of its functions under the Act. According to the pension reform, all employees in the service of the Federation, Federal Capital Territory, and private sector shall henceforth contribute certain percentages of their monthly emoluments towards their retirement. However, this reform will not apply to those who have less than 3 years to retire. Composition of National Pension Commission. The Commission comprises A. A part-time chairman in possession of a university degree or its equivalent and 20 years experience. B. A Director General who shall be the Chief Executive Officer of the Commission and in possession of appropriate professional skills with no less than 20 years cognate experience. C. 4 full-time commissioners who shall each possess professional skills and not less than 20 years cognate experience in finance, investment, accounting, pension management, business administration, or actuarial science. Representatives of D. Head of Civil Service of the Federation. E. The Federal Ministry of Finance. F. The Nigerian Union of Pensioners. G. The Nigerian Employers Consultative Association. H. The Central Bank of Nigeria. I. The Nigerian Labour Congress. J. The Securities and Exchange Commission. The rates of deductions. The contribution for any employee to which this Act applies shall be made in the following rates relating to its monthly emolument. A. A minimum of 10% by the employer. B. A minimum of 8% by the employee. This deduction should be made from the worker's salary at source, while government contribution shall be a first charge on the Consolidated Revenue Fund of the Federation. In addition to the rates specified above, employers shall maintain life insurance policies in favor of the employees for a minimum of 3 times the annual and total emolument of the individuals. No employee will be allowed to withdraw or have access to his contributions until he clocks 50 years of age. Withdrawal from retirement saving accounts. The conditions which govern withdrawal from the scheme are as follows. A. Withdrawal is not allowed until the attainment of 50 years of age. B. An officer retired and is less than 50 years, on the advice of suitably qualified physician or properly constituted medical board, certifying that the employee is no longer mentally and physically capable of carrying out the function of his office, may withdraw. Or if the officer is retired due to his total or permanent disability, either of mind or body. C. Where the employee retires before the age of 50 years in accordance with the terms and conditions of his employment, shall be entitled to make withdrawals. The medical board or suitably qualified physician, at the request of the employee, be made once in every 2 years to review the fitness of the employee, and where the medical board certifies that he is now mentally and physically capable of carrying out the functions of the office, he may re-enter the scheme upon securing another employment. Age of contributor. The authentic age of an employee entering the public service or any other employment shall be that submitted by him on entering the service or taking up the employment. Payment of retirement benefits. A holder of retirement savings account upon retirement or attaining the age of 50 years, whichever is later, shall utilize the balance standing to the credit of his retirement saving account for the following benefits. A. Programmed monthly or quarterly withdrawals collected on the basis of an expected lifespan. B. Annuity for life purchased from a life insurance company licensed by the National Insurance Commission with monthly or quarterly payments. C. A lump sum from the balance standing to the credit of his retirement savings account, provided that the amount left after that lump sum withdrawal shall be sufficient to procure an annuity of fund programmed withdrawals that will produce an amount not less than 50% of his annual remuneration as at the date of his retirement. D. Where an employee retires before the age of 50 years, the employee may request for withdrawal of lump sum of money of not more than 25% of the amount standing to the credit of the retirement savings account, provided that such withdrawals shall only be made after 4 months of such retirement and the retired employee does not secure another employment. Death of employee. Where an employee dies, A. The entitlement under the life insurance policy maintained shall be paid to his retirement savings account. B. The pension fund administrator shall add the amount paid from life insurance policy in favor of the beneficiary under a will, or the spouse and children of the deceased, or the absence of wife and child to be recorded next of kin, or any person designated by him during his lifetime or in the absence of such designation, to any person appointed by the probate registry as the administrator of the estate of the deceased, in line with the payment of retirement benefits. Where an employee is missing. Where an employee is missing and is not found within a period of 1 year from the date he was declared missing, and a board of inquiry set up by the commission concludes that it is reasonable to presume that he has died, normal payment of pension proceedings should be followed. This is to say that the employee's entitlements under the life insurance policy maintained shall be paid to his retirement savings account. Exemption from tax. Any amount payable as a retirement benefit under this act shall not be taxable. Any voluntary contribution shall be subject to tax at the point of withdrawal, where the withdrawal is made before the end of 5 years from the date the voluntary contribution was made. Any contribution under the scheme shall form part of tax deductible expenses in the computation of tax payable by an employee or employer under the relevant income tax law. Contribution under the scheme. Every employee shall maintain an account referred to as retirement savings account in his name with any pension fund administrator of his choice. The employee may not more than once in a year transfer the retirement savings account maintained from one pension administrator to another without adducing any reason for such transfer. Exemption from the scheme. Any employee who at the commencement of the Pension Reform Act 2004 is entitled to retirement benefits under any pension scheme existing before the commencement of this act but has 3 or less years to retire shall be exempted from the scheme. Transfer from one employment to the other. Where an employee transfers in service on employment from one employer or organization to another, the same retirement savings account shall continue to be maintained by him. Pension fund administration. Pension funds shall be managed by only pension fund administrators licensed by the Commission. Pension fund administrators shall carry out the following functions. A. Open retirement savings accounts for all employees with personal identity numbers (PIN) attached. B. Invest and manage pension funds and assets. C. Maintain regular information in investment strategy, market returns, and other performance indicators to the Commission and employees or beneficiaries of the retirement savings accounts. E. Provide customer service support to employees, including access to employees' account balances and statements on demand. F. Process the calculations and payments of retirement benefits. G. Carry out other functions as National Pension Funds Commission may assign from time to time. Prescribed structure of pension fund administration. The following standing committees are required to carry out the fund's functions and ensure compliance with the Act. A. Risk management. 1. To determine the risk profile of the investing portfolios of the pension fund administrator. 2. Draw up programs of adjustment in the case of deviations. 3. Determine the level of reserves to cover the risks of the investment portfolios. 4. Advise the pension fund administrators in maintaining adequate internal control measures and procedures. 5. Carry out such other functions relating to risk management as the pension board may direct. B. Investment Strategic Committee. 1. Formulate strategies for complying with investment guidelines issued by the Commission. 2. Determine an optimal investment mix consistent with risk profile agreed by the Board of the Pension Fund Administration. 3. Evaluate the value of the daily mark-to-market portfolios and make proposals to the Board of the Pension Fund Administration. 4. On a periodic basis, review the performance of the major securities of the investment portfolios of the Pension Fund Administration. 5. Carry out such other functions relating to investment strategy as the board may determine from time to time. Pension Fund Custodians. Section 46 of Pension Reforms Act of 2004 states that pension fund custodian must be a licensed financial institution set up to hold pension fund assets on trust with a minimum net worth of 5 billion naira. The pension fund custodians shall carry out the following functions. A. Receive the total contributions remitted by employers on behalf of the pension fund administrators. B. Notify the pension fund administrators within 24 hours of the receipt of contribution from any employer. C. Hold pension funds and assets in safe custody on trust for the employees and beneficiaries of the retirement saving account. Settle transactions and undertake activities related to pension fund investments, including the collection of dividends and related activities. E. Provide data and information on investments to the Pension Fund Administration and the Commission. Failure to open retirement savings account. Where an employee fails to open such retirement savings account within a period of 6 months after assumption of duty, his employer shall, subject to guidelines issued by the Commission, request a pension fund administrator to open a nominal retirement savings account for each employee for the remittance of his pension contributions. Failure to deduct or remit contributions. An employer who fails to deduct or remit the contributions within the time stipulated in subsection 3b of this section shall, in addition to making the remittance already due, be liable to a penalty to be stipulated by the Commission. The penalty referred to in S11C shall not less than 2% of the total contribution that remains unpaid for each month or part of each month the default continues, and the amount of the penalty shall be recoverable as a debt owed to the employee's saving account as the case may be. Investment of pension funds. All contributions are to be invested by the PFA with the objectives of safety and maintenance of fair returns. Pension funds and assets shall be invested in any of the following: A. Bonds, bills, and other federal government and CBN securities. B. Ordinary shares of public limited companies PLC, public liability companies PLC. C. Bank deposits and bank securities. D. Real estate investment. Dispute resolution. Any employee or beneficiary of a retirement saving account who is dissatisfied with a decision of the pension fund administrator or custodian may request in writing that such a decision should be reviewed by the Pension Fund Commission. Penalties for misappropriation of pension fund: prison term of 10 years plus fine of 3 times the amount misappropriated. B. Forfeiture of the entire asset and properties or fund with accrued interest or the proceeds of any unlawful activity under the Act in his or her possession. C. The Act also criminalizes any reimbursement or payment by a PFA or by pension fund custodian PFC to a staff, officer or director upon whom a fine has been imposed, the minimum fine being 5 million naira. D. For pension fund custodian PFC, the minimum fine is 10 million naira upon conviction, where the PFC fails to hold the funds to the exclusive reserve of the Pension Fund Administrative and National Pension Commission (PENCOM), or where, if applied the funds to meet its own financial obligations, in the case of direct, 5 million naira or 5 years imprisonment, or both. E. Jurisdiction to hear such cases is vested in a court of competent jurisdiction, which include federal and state government courts, including the High Court of the FCT plus National Industrial Court. F. The court may lift the veil of incorporation where necessary and ensure speedy and just determination of any case before it. Chapter Review. This chapter examines the procedures for the approval for payroll by the Accountant General of the Federation. The required actions of the various accounting officers and organs were also discussed. The institutional and legal framework for pension administration was thereafter discussed with some details.